Listen, I did $50,000 in one trade. That's the power of the model. You just have to wait. It was a 1 to 51. I have the highest payout in the history of the firm, and it was a $51,000, and I risked $1,000 out. Because each of these candlesticks is telling a different story. Like if this candle closed here, right? Say this wasn't a doji, the body of this candle was in here, this would be an invalidation. Like I wouldn't take the setup. I want to see a doji candle. Why? Because
Today we have a very special guest, someone who's jumped onto the trading scene and taken it by storm, closing in on almost 400,000 in payouts in just 3 months, while also having close to 400,000 currently within his Apex accounts too. This is a very high risk to reward strategy breakdown that we're going to be doing today, and without further ado, it is the one and only TG Capital, aka Tyler.
But if you just stay patient and you wait for this setup, I promise you it could change your entire life. Literally, it did to me. And listen, based on my data, I can get maybe 8 to 10 entries a year. I typically like to use like a 10 pip stop loss. Okay. The risk to reward minimum that I'm taking on that trades is a 1 to 20. Normally, the only thing I will say with gold, I don't use a hard stop loss. I will wait for a close below this candle because this is the indicator I told you guys about where it's showing the bullish candles. I'll actually bring the indicator up. It's called I'm telling you right now, if you're patient enough to, and you can nail this strategy down, it'll set you financially free, 100%.
Welcome back everyone to Chart Fanatics, the go-to channel for all the very best trading strategies in the world with the very best traders in the world. And today we have a very special guest, someone who's jumped onto the trading scene and taken it by storm, closing in on almost 400,000 in payouts in just 3 months, while also having close to 400,000 currently within his Apex accounts too. He's crushed the CFD space. He's currently taking over the future space. This is a very high risk to reward strategy breakdown that we're going to be doing today. And without further ado, it is the one and only TG Capital, aka Tyler. Great to be here with you, man.
I'm super excited to be here. It's a dream come true for me, to be honest.
It's my pleasure.
I even reached out to you in the DM. I was like, I was going to be on one of these with you one day. And it was a goal for me. And I'm just glad to be here with you today.
It's my pleasure.
Talk it out.
My pleasure. Where should we begin then?
We're going to go with, I have a few setups that I utilize, but for the sake of today, let's just go over the one that I utilize to make the most amount of money.
Yeah.
So the first thing that I'm going to write here is that before anything, we're strictly going to be trading in the London kill zone. So I'll write out here, we're only going to be trading London from the hours of 3 a.m. and this is all NY time, okay? And I'll usually stop looking for entries at around 6:30 a.m. So right when like New York crosses over, that's when I'll stop looking for my entries.
Yeah.
Okay. So once we have the kill zone established, we're only going to be trading on one time frame. Why? To keep it simple. So we're only going to be trading the 30-minute time frame.
Interesting.
And we're going to use, for our take profit, we're going to use the daily chart. So the daily is our TP. Because why? We want to know the overall narrative of the market, and we want to go with the higher time frame structure. So to me, the 30-minute is still low time frame. Like to each his own. Anything below the hour for me is still low time frame. So this is what are going to be our main focus here. So before any TA or any price action, we need this to be established. So once I know that, now I'm going to come into the market. I have a few indicators that I utilize because I'm more of trading with the trend. And I'm going to also state this. The most amount of money that I made, I am a long bias trader. So I'm mostly taking longs or looking for longs. I'm not good at shorting. Just based on my back testing and my data, I'm just not good at shorting. I don't know. I have years of data from it, and most of my money came from longs, and especially on naturally bullish assets like gold and the NASDAQ. So I'm taking advantage of a naturally occurring bullish asset in the market and then just simply waiting.
Yeah.
That's the problem that a lot of people have, is that they don't have the patience. They need to feel like they need to be in the markets all the time. And for me, that's where I really struggled at first, is that I was looking for a trade every single day on the lower time frames. And then when I scaled back and I really just focused more on the higher time frames, then I really saw a lot of success and actually snowballed and happened from really, really fast. So less is truly more. It may sound like a cliche statement, but it really did work for me.
Hey guys, just a very, very quick one. If you're enjoying this playbook and you want to get it sent directly to you, make sure to go on chartfanatics.com, put your email in, and every episode we drop, we will send you a direct PDF breaking down this exact playbook. or alternatively, also the playbooks will be put all together with the rules over on TradeZella. That is an incredible collaboration. So if you want to actually add the playbook to your TradeZella, make sure you go check that out as well. But let's get back into this episode.
So going on here now, I'm gonna go with a different market here. So I have a few EMAs that I use. So
Okay.
I'm going to try and draw this out for you guys so you can really visualize it. And then when I pull up the charts, you'll see.
Yeah.
So, okay. So it's 3 a.m. and I'm coming to the charts, right? This is a 5 EMA. This is I think it's a 9 I use. And then this is a 13 and then a 21. Okay? So, and for the sake of the conversation, we're only going to be focusing on a long position. I do take shorts, but let's go with my A+ long setup. So now, when I come into the market, you see how all these EMAs here, the 5, the 9, the 13, and the 21, they're all stacking. So it's showing strong bullish structure already. If they were intertwining like this, if the EMAs were crossing like here, I wouldn't be interested in any price action that has to do with that because it's a low probability condition.
Definitely.
So now, when I come to the market, I'm looking for 3 a.m. hits here. What do I see? I see a fair value gap here, printing on the 3 a.m. candle, right? Mm-hmm. Let's just say it was a small wick here. Okay, and then you have another candle here, and then another candle here, like this, right? So after I see that, that's my first sign. So I'm already watching the market. Once I see, it doesn't have to be at 3 a.m., but based on my data, when the candle is at 3 a.m. or 2:30 or 3:30, it's normally really, really highly probable that the trade is going to go in my direction. So now, what do I want to see next? I came up with something. It's going to sound weird, but I call it a trident pattern. So yeah, I just came up with a name with it so I could help myself, understand it and look for it in the market. So after I see my fair value gap printing, I'm then going to look for, it's going to be a doji candle, right? And this is the fair value gap here. Okay. Mm-hmm. Now this is what ICT calls, it's the consequent encroachment or the 50%.
Yeah.
If I get a doji candle here, especially a wick that wicks through it, and I have my EMAs aligned, and I'm also seeing this strong fair value gap, and then the next candle after this, doji candle, closes below this high, right? If it closes above the high, I'll invalidate the trade.
Yeah.
Just based on my data, it's not as highly probable as this. Mm-hmm. So when this closes here, I'm like all in. So I see this, I'm entering here. My stop loss would be below this candle low here, right? And then I would jump to the daily time frame, and then I would look for my TP. And my TPs could be huge. They could be like, the biggest trade I've ever had was on Think Capital. It was a 1-51 on a UJ trade. Yeah, I have the highest payout in the history of the firm.
Incredible.
And it was a $51,000, and I risked $1,000 on it, on a 200K account. Yeah, it was insane, bro. And I actually just closed another payout. It was like $12,000. So I'm working my way to 100K with them.
Wow.
So, but yeah, when you see it on the chart, it's kind of hard for me to write. I'm trying my best for you guys. But when you see it on the chart, it's going to look a lot cleaner. I actually have multiple setups like this. But if you just stay patient and you wait for this setup, I promise you it could change your entire life. Mm-hmm. Literally. It did to me. And listen, based on my data, I can get maybe 8 to 10 entries a year per pair. So I'm trading the USD pairs. So UCAD, NZD USD, Euro USD, GBP USD, and USD JPY. I don't trade AUD USD because in my back testing, it didn't work well.
Okay.
But the biggest wins that I have are on gold.
Really?
That's the most money I've ever made is trading gold. Especially now with the market conditions as you're seeing on gold, it's like, holy cow. So if you just wait simply for this setup and you wait for the right time, this setup means nothing without the time. I want to stress that heavily because without time, you're literally, the price action means absolutely nothing. And the person who taught me that the most is ICT because I was looking for trades at all hours of the day. You know what I mean? Like at low probability times, like 2:00 in the afternoon. It's like a fair value gap printed then is not as highly probable as a fair value gap printed in the opening of a London session kill zone.
Yeah.
You know what I mean? So that now that you're coming to the market at such a small time, like for me, this is only about 3 hours, and you're focusing on a smaller window, you can now maximize and look and be like, okay, these are the candlesticks that I want to see, because each of these candlesticks is telling a different story. Each of them has their own narrative. Like if this candle closed here, right? Say this wasn't a doji, and the body of this candle was in here, and it this would be an invalidation. Like I wouldn't take the setup. I want to see a doji candle. Why? Because the sellers try to come down here, right?
Yeah.
But there was such strong bullish price action that they came all the way back here. So it's already telling you. Now it's telling you the narrative of the market. The market wants to go higher. So don't try and predict the market. Just react to it.
Yes.
So let the market do what it's got to do, and then you can get involved in the market.
And in terms of the EMA, so you're just using them for the correlation of like the momentum.
Exactly. It's basically like I kind of utilize it as like a wave.
Yeah.
So I want to see them all stacking because it's showing, okay, price is already feeling very bullish for me. And now I get the candle confirmation on top of that with being on the 30-minute time frame, which is a higher time frame, and I'm aligning it with the daily. It's like, this is a home run. Like I'm not kidding, on these setups, my win rate is really high, like 90%.
Wow.
And you just got to wait. Like that's the problem with most people. They'll take an invalidated setup. Like I used to take all of these setups and then I refined the strategy more and more and more to the point where it became bulletproof.
Yeah.
Like it's that good. So that's why when people tell me it's like, you never lose, you never lose. Well, I did lose. I also took a year break from prop firms when I was failing, and I focused solely on backtesting this edge to the point where I knew that I was going to be successful. Like when I finally backtested this to the point where I knew it was that good, I put $20,000 on all my credit cards, right? On challenges. I maxed out every single credit card I had. My parents told me I was a psycho. I said I had so much self-belief to the point where I was delusional. I passed every single challenge. And my first big payout was with instant funding. I made $20,000. After I made that $20,000, I quit my job. I was in the elevator union in New York, and I moved to Miami. I was sick in the head. And then as soon as I moved to Miami, right, I had my first 6-figure month. And it snowballed to the point where I had 2 consecutive 6-figure months. Then now I made close to $400,000 in payouts. It's like it's happening for me really, really, really fast. And especially like with social media and everything too, it's like the growth I had in such a small amount of time is that anybody can achieve that. You just got to put the work in and then trust your system. Like I'm solely focusing on the mathematics of my system. My edge is really, really good in the market. So whenever I see a setup and my edge is there, I'm taking it.
No, definitely. And what's that in terms of the transitions? This is on the USD pairs, right? So we're going to
Yes.
grab this.
Yeah.
So this is USD pairs and then gold.
Yes.
Yeah. And in terms of this, so like you said, if this invalidates the trade if you get closed below rather than the doji candle, right?
Yes.
And then your stop loss is below this level here?
Yes.
And then your TP, you said on the daily, what would you be looking for in terms of TP?
Like my minimum TP. Okay, even if you solely wanted to focus on the 30-minute time frame.
Yeah.
So most of my stop losses are between, like, for USD pairs, for like GU, EU, USD CAD, and NZD USD. I typically like to use like a 10 pip stop loss.
Okay.
And like the risk to reward minimum that I'm taking on that trades is a 1 to 20.
Really?
Yeah, I know it sounds crazy, but I made it to the point where I'm having a high RR and a high win rate. I know a lot of people say that it's not possible, but it is because I've done it.
Well, you're doing it,
Yeah. Normally, the only thing I will say with gold, I don't use a hard stop loss. I will wait for a close below this candle because what I noticed with gold and strictly on my back testing is that it has a lot of liquidity wicks.
Yeah.
And it's extremely volatile pair. So sometimes, okay, say I get this setup, right? The next candle could drive like this. It could be like here, and then I could get a wick all the way down here, and then it could close back up.
Yeah.
And this is just a liquidity wick for it to build more, get more buyers into the market.
Yeah.
Stop out everyone here, and then go a lot higher. I've had it happen countless times, and I have over years of data with it, and I just noticed that with gold, I strictly don't use a hard stop loss. I'll wait for a candle close. So
if
maybe
it closes, if the candle
if the candle closes below, I'm out.
Okay, got you.
Let's take a break for a minute there, guys, because I want to tell you about our preferred prop firm here at Chart Fanatics, and it is Apex Trader Funding. We are no stranger to Apex. We've had JadeCap and Trader Kane on Words of Wisdom and here on Chart Fanatics. Now, they are well known for having record payouts on Apex of over $2 million a piece. Now, even if you don't achieve a 7-figure payout, the reality of achieving a multi-6-figure payout with Apex is absolutely achievable and an incredible opportunity at that. And you can see that on screen right now with all the incredible payouts being paid out to traders around the world, traders just like you. Now, Apex is the biggest futures firm in the entire industry and have paid out over $500 million to traders across across the world. No matter the type of trader, you can be one of them too. Now, one of our favorite things about Apex is that you can get up to $6 million in funding using the 20 accounts that you're allowed to have and the 300K account at that totals $6 million. And another thing that we love about Apex is that there's no daily drawdown. It's a one-step evaluation and the fact that it's uncapped payouts. And 90% of the profits made are yours to keep. Now, don't forget, regardless of the type of trader that you are, you do not have to worry about trading news as long as you are following your day-to-day trading strategy. The possibilities are limitless at Apex Trader Funding. Now, you can get up to 90% off. 90% off, the biggest discount in the entire industry at Apex using the code CF and the link in the description below. Thanks to them and thanks to Chart Fanatics. Make sure you get your futures funding with Apex. Now let's get back to the episode.
But gold is usually my best pair, especially with longs. It's a naturally bullish asset. Same with NQ. So
No, definitely. No, definitely. Have you run into any problems in terms of having no stop on gold when it comes to the firms?
no, not really. I haven't. Like, I won't trade a firm unless they have
Those rules, yeah.
Yeah, I don't trade with firms that have a stop loss rule.
Yeah, no.
I think it's like, to be honest, and then you got to place it within a certain amount of time. I just don't like. There are a lot of like literally, I'm banned from like over 25 firms.
Really?
Yeah, I can't trade with any of them really anymore. So, and the thing is that once I got one big payout with one, and then I started showing it on social media, I feel like it all caught wind.
Yeah.
They won't let me buy account. Like, some firms don't even let me buy account.
They don't say anything. They just block it, right?
Well, a lot of the firms come up with these arbitrary fake rules and they breach my accounts, or they just tell me that I can't trade with them anymore. And if you know, a lot of these firms that are in the space are white label firms. And once you get banned from one white label firm, your name goes on into a database. And then either they won't let you buy accounts or they won't offer you funding. So you'll pass and then they'll just deny you.
Definitely.
So,
But the beautiful thing is, though, this is an actual edge. So it's not a case where, some people where that happens to them, or most people when that happens to them, it's because the edge they have is a prop firm edge, if that makes sense.
right.
It's like risk high and
course.
play the model of like, we'll spend 20K on challenges, but make 200K because...
Yeah, I don't do that.
Exactly.
I'm going to be honest. My all-in with challenges, even from when I burned them when I was first going through it, is probably $15,000. So my ROI on my investment is pretty big. So,
Amazing, yeah.
You know what I mean? But I will say this. Luckily, like with all the things that have been going on and me sharing my payouts, I'm having an amazing experience with Alpha Prime right now. Like,
That's great.
I'm loving it. As the person who is in charge of it, James, like, we talk every single day. He gives me a lot of good fundamental analysis. We were just talking before, and I'm loving it. Like, it's a dream come true for me because now I'm trading real funds, and he wants to scale me to like a 7-figure account. So to go from prop firms to now have the opportunity to be in a live environment, and he plans on, like, I think I'm one of 6 traders so far, and he wants to get this, he wants to make it huge, and I'm just loving the experience so far, and he wants to bring everyone together to, like, say like you have a trader, he has a few traders from Singapore, some from Boston, a few from California, and he wants to bring us in a group where we could share our TA and see if it aligns, see if we could learn something from other people. It's just a really, really cool thing, and I'm just so glad to be a part of it because I always wanted to have, be involved in something like that. And now I have the opportunity to.
In terms of the model then, so daily time frame wise, in terms of targets, what is it that you would identify on the daily time frame
So
to target?
on the daily, I'm looking for the same exact structure here with the EMAs, just on a daily chart. So you know what I mean? So if I see this, okay, so say we get the 30-minute setup, and then we have, let's do the EMAs again, right?
Yeah.
Hold on. We'll do the EMAs here. Now this is the daily chart, mind you, okay?
Yeah. Let me get rid of this one here. Okay. This is
Now, so you're getting, let me get the black one.
yeah.
Thank you. And then, so you have the confirmed setup on the 30-minute, and then your daily. Now, this is all occurring inside of this daily candle. Remember that. So say this daily candle is here, and I have another indicator I'm going to show you guys. It's actually a really good one. It shows you how the candle closes. So if it's a strong bullish candle, it's going to close a bright green. If it's a bullish candle, but it's not extremely strong, it'll close blue. If it's a bearish candle and it's strong, it'll close red. And if it's a bearish candle, it's not extreme, like not a lot of high volume, it's going to close black. Actually, a friend that I used to work with, he showed me this indicator. It works really, really well. And I just utilized it to help me Just add an extra confluence. Like I don't rely on indicators, but if I could add a confluence to the trade, I add it. So say I'm on the daily chart, and when I pull up my charts, you'll see it. This candle is here on the daily, right?
Yeah.
And it's closing green. And it has this is how it's printing right now. And then I get this set up inside of it. I know that this is going to move huge.
Okay.
And so usually I'll just ride the trend until like the EMAs cross over. Or if I get like a large bearish candle, then I'll cut it.
Yeah.
Because then I know, like say the candle closes red, or I get like
So it's kind of like your management technique as well.
it's the same thing. Yeah, so I'm utilizing the lower time frame to get in on the daily. So I'm analyzing what's going on inside of this candle. So this candle's already strong for me. But then if I see this inside the candle, then I know it. That's my confirmation to go long.
Yeah.
You understand?
Yeah, no, 100%. And then in terms of your targeting wise, are you targeting like
sometimes
external liquidity?
Correct. Or I'll just ride the trend for as long as I can. So if the trend ends after it takes out some sort of liquidity, I'll just cut it. And most of the times when I'm trading props, it gets to a point where I'm like, okay, this payout's going to be huge, and I'll have to cut it. That's why I cut like on my Think Capital when I was up $50,000, the trade was still going to go.
Yeah.
But I didn't think that they were going to pay me 6 figures in one shot, so I cut it. No, I'm being for real. It's why that trade ran I knew it was going to go lower, but I was like, all right, let me be safe here. It was my first payout with them, and I took it. So normally I'll ride this for as long as I can, and then I'll just focus on if I get like an IFVG, like it invalidates a fair value gap with a strong bearish candle, I'll be like, all right, now there's a chance that this is going to reverse against me. So, so a little bit, it's not entirely mechanical. A little bit is discretionary.
Yeah.
Because like everyone's going to have their own intuition in the markets. This is just from something you can't teach someone is having the time on the charts. It's just I have that intuition too of when I know when to cut the trade. So I'm not going to say it's 100% mechanical all the time. This part is for me.
Yeah.
But as far as taking out like liquidity and knowing when to get out, that is a little bit discretionary. I will admit that.
100%. Yeah.
And so I think that that's okay. Like having an 80-20 model, like that's how most traders are going to succeed. I feel like 100% mechanical models aren't going to work all of the time.
No, definitely. And I think that 100% mechanical, if that's the case, then you might as well just make it into an algo.
Exactly.
Yeah, don't have to worry about it.
Yeah, you have to have, listen, the human being is going to have a little bit more of an edge over a 100% mechanical model, I feel. Because I've tried the mechanical models and they don't work all the time.
Yeah, no, definitely. Especially when market conditions change.
Correct.
Right? Because then that's when the discretion really comes in because, as we've seen between last year to this year, the markets are completely different. The volatility, is so much higher. And with that, then you need to make tweaks. You need to make changes. Use discretion based on, obviously, those changes to be able to do so. And especially, like you said, when it comes to take profits, even when it comes to, say, a stop loss or cutting a loss, that's discretion, right?
100%.
When everyone always says, you have to cut your losses as early as possible. That's discretion. Otherwise, you just got to leave it to stop loss, right?
Well, who are they to say to cut your losses early? Everyone's process and system is entirely different. Like the way I trade and the way I see the markets, this is what I tell everyone on Twitter who are asking me. You guys, even if you have this system, right, you still may never trade it the same way as me.
Yeah.
You won't. It's just the way it is. This is an individualized thing. You have to find what works for you. Like I'm patient and I tried the lower time frames. It doesn't work for me. It's too much on my psychology. But some people are great at scalping. They're great at the lower time frames. It's just not something that ever worked for me. So I do want to stress that is that you can take what I teach you here, but maybe implement it in a way where it works for you.
Yeah.
You know what I'm saying?
Yeah.
That's how I became successful. I took bits and pieces from a lot of different people, and then I made it my own. So I took the models, what ICT taught me in his mentorships, and I made it 100% something that's suitable for me. I'm not good at trading order blocks. I'm good at recognizing fair value gaps and inverted fair value gaps. So I utilize that.
Yeah.
You know what I mean? You just take what works for you. Like a friend of mine, he trades breakers. I don't even know what a breaker is, to be honest. It's just everyone's different. So
100%.
you just got to find what works for you.
Big part of what you said, though, is that you spent that time to collect data. You understand the maths of your model. And I think that's the biggest difference. Because even, again, as you said, someone could be watching this right now, understanding it all. We're going to go on the charts and break it down there as well. But even then, they still, regardless of whether they've seen it, they need to go and get the data themselves.
Of course.
Collect that data themselves. Because for them, it might be a case where, through that data, even though it's the same setup, they might notice that they're better at shorts.
Exactly.
They're completely the same model, just the opposite direction.
Of course.
And they might end up being the same thing. But London-wise, is that the only session you focus on, or are you looking at New York as well?
No, I'm only looking at London. Why? Because the data showed me that the highest probability setups are in London. So I don't fix what's not broken. That's it. I just wait patiently. I come to the market for this, few hours every single day. And, I got to wake up early. It's not the best, but the reason why I started trading London is because when I was in the elevator union, I started at 6 o'clock in the morning. So I was trading before, and I was like, all right, how can I make London work? And I liked the volume in London. I thought it was clean. The price action was clean. And then I can get the continuation in New York.
Yeah.
So it's just what I preferred, and it's worked. So I'm not going to change my model. I just stick to it. It's generated me this much in profit so far, so I'm good with it.
Definitely. No, I can imagine. Definitely. Cool. Should we go into the sort of pros and cons?
Let's take a break for a minute there, guys, because I want to tell you about our incredible sponsor, TradeZella. TradeZella is the #1 trading tool in the entire trading industry. TradeZella allows you to become a more profitable trader, allows you to make immense progress as a trader, no matter if you're a beginner or an advanced level trader, because it makes journaling easy. It makes journaling something that is fun and enjoyable and something that is interactive. So no matter if you're a crypto trader, no matter if you're a futures trader, no matter if you're a Forex trader, no matter if you're a stock trader, all you have to do is select your broker, your platform of choice, and connect it to TradeZella, and it will automatically sync your trades and pull all of that data onto the dashboard, making journaling and finding your edge and adapting your edge so easy. In collaboration with TradeZella and Chart Fanatics specifically, we are actually getting the playbooks from the episodes that we're filming with these incredible verified traders and adding them as playbooks onto TradeZella, so you can actually go on there and see the rule sets already predefined. So make sure you check that out as well. Now, you can actually get 10% off your monthly subscription using CF10 on TradeZella right now. But more importantly, I would say CF20 for 20% off your yearly subscription with TradeZella. The links for TradeZella are in the description below, so make sure you go check them out. Use CF20, get 20% off your yearly subscription, become a better trader today. Now let's get back to the episode.
These are the pros. First pro is going to be we have a high RR and a high win rate. Okay?
Definitely.
Another pro. This could be a pro or a con. So you're focusing on a small window of time. So some people may think that that can be in the middle. But for me, that's a big pro. It's because I don't have to be involved in the market all day. I come during my window. If I see my trade, I take it. So another pro is small window of time. All right. I'd say a big pro is that we're taking advantage of trending market conditions. Now, we'll go into the cons. Oh, another pro could be tight stops, or it could be a con. I think tight stops are good because it creates the high win rate for you and the high risk to reward. So, con. This is #1, okay? Patience.
Yeah, 100%.
That's
the one that seems to be there.
I know you guys may not have this, but these setups aren't going to occur very often. I'm going to be completely honest with you. Like I said, for my USD pairs, 6 to 8 entries a year on each pair. Gold, 10 to 15. Okay, so I know it sounds crazy. You guys got to just wait. You want to trade every day? It's not going to happen. There could be 2 weeks where you're not taking a trade. But think about it like this. When you have a high win rate and a high RR, that one trade will trump every other person who's trading regularly and making $1,000 a week, a couple $1,000s a month. You could do. Listen, I did $50,000 in one trade. That's the power of the model. You just have to wait. Okay, so let's think of another con here.
Because I think obviously, if someone's not available for that particular window.
Yes, you're right. Small time window. I keep forgetting that everyone doesn't have access to the. To be able to trade the same window as me. In New York, if somebody's working, it may be difficult for them to get access, 3 o'clock in the morning to wake up. You got kids, you got a family, It's probably hard for them. And I'm thinking of it in a way because for me, it's easy. I'm a full-time trader and I could just wake up and then go back to sleep. So yes, that is a good con.
What's the reality of you take an entry, it just goes in your favor? Or is there a case where even though you're getting 10 to 15 per year, is it 10 to 15 that work out essentially? But is there more entries, signals that are provided but they might just be break even because they didn't move away. Does that make sense?
Yeah.
Is that the case or no?
I had like if I have a break even, it's maybe one of those.
Okay.
I'm gonna be honest. The win rate is really high. The win rate, if you wait for the setup and you know it's A plus, the win rate's like it really doesn't lose much.
Mm-hmm.
I know it sounds crazy, but I've done it. Like I literally, you can go on my Twitter and see my data. Like I've literally like I don't go through accounts, I don't churn accounts. Like I just wait. So when I'm patient, the trade is most likely going to win. So that's all you have to do. This is the biggest thing, is just sitting on your hands and just waiting for the market to come to you.
I'd say the only other one that stands out to me would be that, high risk to reward trading, you're handling sort of the P&L changes. Does that make sense?
Yes.
So like you could be up 10K, it might come down to 6, it might go up to 20, it might come down to 14.
And I want to stress this. If you are going to use this model, okay, and you're going to trade props, you have to have, this is crucial, you have to trade a fully balanced base prop firm. So like Alpha Capital, Think Capital, FTMO, where they're not taking, some of these prop firms, they'll have a hybrid drawdown. So at 5 p.m. when the day closes, right, they're going to take the highest balance between your equity or your balance, right? So say you're in a trade and you're up 10%, and I know the swing could hit for 25, 30%. It's 5 o'clock. Now they're taking the highest equity of that 10%.
Yeah.
The next day I get a 5% retracement. The account's burned now.
Yeah.
How can you going to penalize a trader for that? That's insane. And I tell everybody, if you're a swing trader, you need a fully balanced base firm. And I believe that think about it like this: the best firms in the space are fully balanced based. The only reason why these firms are going to have equity based or hybrid based is so they're going to tailor these accounts to people who burn the most accounts. And who are those? Scalpers and intraday traders. And that hybrid drawdown is they're not looking out for you. They just want you to burn the account. So that's why they have those rules. So I tell someone this: if you're going to try this model and you want to swing trade on the higher time frames, you have to have a fully balanced based firm. It's crucial. And there are enough out there that you could just utilize. You don't need to go with a million of them.
Definitely.
So,
no, I love that. Let's just add that then in terms of just the P&L sort of changes.
So P&L. Oh, hold on. All right, P&L fluctuation.
Yeah.
There you go.
Perfect. Whoa, it's time for the charts, I think.
Yeah, let's get it going.
Let's go. So after that amazing breakdown, we're now going to look at the actual strategy on the chart. So I'm very much looking forward to it as well. Drop a comment with your thoughts so far. Any questions so far? Drop it in the comments below. Make sure you subscribe. But let's do this.
Okay. All right. So if you can remember what we went over on the whiteboard, we're going to bring that to the charts now. The same thing. So what do we see here? I want to stress this. When you guys are doing your back testing, I do all my back testing on TradingView. You need to have this data. So I write A++ setup, and I have my handwritten journal where I'm writing what the candles have done. Like, you need to do all of this. It's extremely crucial. This is what's going to take your trading to the next level. So with that, what do we see here? Like I said, it's hard to see my EMAs, but here's the 5 I'm told you guys about. Here's the 9.
Here's the 5, 9.
9. Here's the 5. Here's the 9. Here's the 13 or 15. I don't really remember which one. And then this is the 21. So now you see, like I said, it's like a wave. They're all stacking, right? Here's the FVG printed at 230. Like I told you, 230 and 3 o'clock, those fair value gaps are extremely, extremely strong. This is the indicator I told you guys about where it's showing the bullish candles. I'll actually bring the indicator up. It's called bull trading on TradingView. Bull trading, 1 minute easy scalping. You change the first time frame to daily, time frame 2, 30, 30, 30. Okay? This indicator is really, really good. So, like I told you, if these candles are closing green, it's showing strong bullish price action. We're in the top of the Bollinger Band above the 200 EMA. I forgot to stress that in the whiteboard, but if we're above the 200 EMA, that's my bias. If we're below, we're looking for shorts. So I keep that as like a neutral bias. So if we're above the 200, structure is bullish. So now, what do I look for? I look for the trident pattern. Like I told you guys, here we have this is the leg of the FVG, right? So 1 candle, 2, 3. FVG is printed here. We're not worried about this fair value gap. You know why? Because it's printed outside of our kill zone.
Interesting.
Okay?
Yeah.
So we're ignoring that. So this is the one that gets reacted to also. So 1, 2, 3, 4. Okay? This wicks through this fair value gap, the consequent encroachment of here, right?
Yeah.
Between these 3 candles.
50%.
Now, we simply set a limit here, stop loss here, and then you just let it run, kid. That's it. So now you're on the 30-minute. Look at what this trade did, okay? You simply just sit through it. This is the power of the model. This ran for, okay, this is on the daily time frame. I will even bring this up. If you want to just solely utilize a 1 to 20, you can. But even if you bring stops to break even here, say this break a structure and then you bring stops to BE, you could take my model and use it in a different way. I'm not saying the way that I use it you're going to like, but you could take what I'm telling you here and then make it your own. Like I said, say you want to go BE here. That's fine. I just don't do it. Then I go to the daily chart. Okay, let's see where this move was on the daily. Notice this was the setup here. Okay, notice that we're just above the 200 EMA.
Mm-hmm.
This is all the EMAs are stacking. Like I told you, the wave.
Yeah.
Here's the 5, 9, 13, or 15, and 21. Where here's the trade. This is what's going on inside of this daily candle. What I told you guys about. You see, we're looking at what's going on here now. We just let it run. See, look at the EMAs are still stacking. You could cut it here with this IFVG, like I was telling you about.
Yeah.
Okay. But simply based on here, all the EMAs are still stacking, so you could hold it. Like this ran for 175R. I know it's impossible to hold it for that long, but say you trim and you just leave a runner for 20%.
Definitely.
You know, like you can make it your own. I'm not saying the way that I do it is the best, but you can utilize the way that I'm telling you to you guys, and then really truly make it something powerful. But as you can see, that's like an astronomical risk to reward. I just showed you that it could be done. There's a high risk to reward, and it has a high win rate. But like I said, there's not many of these setups. You just got to be patient.
Yeah.
You know what I mean? You have to wait.
Let's take a break for a minute there, guys, because I want to tell you about our incredible partnership with PropFirmTrader.com. Majority of you out there are prop firm traders. You're using prop firms to leverage your trading skills to be able to get more capital and to be able to absolutely change your life. So what's important to you? To be able to find the right challenge for you with the best firms and, most of all, the best prices. And that is exactly what PropFirmTrader.com does. PropFirmTrader.com allows you to compare prop firms, be able to find the best challenge suited to your trading style, and get you the exclusive best discounts in the entire industry so that you're paying the cheapest price possible for your prop firm challenge. So on PropFirmTrader.com, you'll be able to use filters to be able to do that and find the exact challenge for you, be able to find your favorite prop firms. Just look on screen right now. You can see futures firms, you can see CFD firms with offers up to 50% off, which is incredible. And you can also see Alpha Capital there with a one-step challenge with 25% off using PFT1. And there's so many more exclusive discounts only on PropFirmTrader.com. It is the go-to site for all prop firm traders out there. And one thing I'm really excited about that I personally helped to organize was the giveaway of giveaways, the 7-figure giveaway, just through purchasing your challenges for the best price through PropFirmTrader.com. Every single week, you will automatically be entered into an incredible giveaway, a collaborative effort across all of these firms on screen, between 100 to 200K accounts, over 7 figures. It means that one person every single week who's made a purchase through PropFirmTrader.com will be getting 7 figures in challenges that can completely revolutionize your trading journey. Again, all you do is for any of the firms on PropFirmTrader.com, use the code PFT at checkout, and you will automatically be entered every single week. The link for PropFirmTrader.com is in the description below. Now let's get back to the episode.
Patience pays, you know, and
Of course.
the beautiful thing is that this can just be one playbook, right? This could be one playbook. You might have a different playbook that allows you to have a bit more frequency potentially.
Yeah,
It can be difficult to do because then to be able to focus on when's this one showing versus this one. It can be. It depends on the playbook itself. You know how mechanical in terms of like what you need to see to actually start looking for it and identifying it. But it's incredible. And as you said though, it might go for 175R. You may not hold it that long.
Yeah.
But it's about even if you hold 10%, so it's a 17% trade.
Yeah.
Just with 10% volume.
Yeah, but the smallest amount of RR that I've taken on a trade is 1 to 20. That's like my minimum.
Yeah.
And I know people are like, how is that possible? I created the system to where, because everyone always says you can't have a high RR and a high win rate. Well, I do. Like, there's nothing else to be said about it. Like, you could tell me that it's not possible, but it is. I have a lot of people on Twitter that come for me about that, and I'm telling you the truth. Like, I have the data and I could show it to you. that I have a high RR and a high win rate. My win rate is like 90%. I just, like I said, the setups aren't frequent.
And then
You want to see another? I could show you another one on a different pair.
we definitely can, yeah.
Yeah.
In terms of where was the pair?
This was
Are these like your London zones? These
okay. Yeah, you see these lines?
Yeah.
This line. This is my sessions indicator. So I just use that to show myself where London is, and then where I'm basically looking for a trade. And then outside of this, this is what is powerful. Is that this black here? You're not interested in price action. So when you're back testing, you don't care about what's going on here. You just care about what's going on in this small amount of time.
This allows you to sort of get more simplified.
That's what I'm saying is that when you're okay, now you're focusing on this small window. Now you could dive into each candlestick and on a 30-minute time frame in that small amount of time. Think about how many candlesticks that you're looking at. Yeah. Not many. So now you're just focusing on the highest probability candles. You know. So let me show another one here. Let me show a UJ one because I really like UJ too. See, like as you can see, like look here. There's no trades, none, 0 trades. Look, we're not interested in it. See, it's not. This is like a couple months.
How far in advance are you sort of identifying the potential for a trade? Is it literally on the day? Or
On the day.
On the day.
On the day. So I come on the
you
daily.
still have to turn on the.
Well, if my daily chart is below the 200 EMA, I'm not looking for longs. Okay. I'll be short biased.
Yeah.
You know what I mean? So if I do take a trade, right, and say my higher time frame, the 4 hour and the daily's below the 200 EMA, and I get a long setup, I'll cut it earlier because I know that the higher time frame is bearish.
Yeah.
So maybe I'll do like on those trades like 10 to 15 R, and I'm cool with that. But the biggest trades I have is when you're aligned with the higher time frame, of course. Yeah. So here's another one here. That one's outside. That's a higher time. That's a different method. I have a few models that I utilize now because I've gotten better with navigating the higher time frames. So here's another one here. This is a big one. Here we go. Now we're above the 200 EMA. We're inside a London kill zone. This fair value got printed at 4 a.m., which is still it's not as highly probable as a 230 or 3, but especially on UJ, which is in my back testing, it's a really strong pair for me. So what do we see here? This is the fair value gap we care about. There's none here. So we care about this one. We also get this break of structure here above. This is my Asian range.
Yeah.
Which is also, I utilize, I like to see all the sessions here. So I get this break of structure above the Asian range. We're above the 200 EMA. I get this 50%. Look at this candle. This is what I want to stress is look at the wick on this candle. It's a strong doji candle. This
trident, yeah.
This is the trident pattern. So between 1, 2, 3, it looks like the staff of a trident, but it's just the opposite way. So I just came up with a cool name for myself to remember it, and I actually love the name of it. So you could see here, this is our fair value gaps printed. 1, 2, 3. We get this candle. This candle doesn't close above this high. Say this candle closed above this high. I invalidate the setup. It's not valid.
Really?
You want this candle to close below. Now
why would it invalidate you?
It's just based on my data. It's just not as highly probable, so I don't take it. Like granted, it could win, but it's going to diminish the win rate.
Yeah.
It's just these little nuanced things is what I've really made. That's what I'm telling you. I've analyzed everything. So everything that I've journaled, I go, okay, how can I make this to the point where it really never loses?
Yeah.
And that simple little thing right there is not taking that candle increased my win rate astronomically.
Wow.
So it's just a small little thing like that. So now once I see this candle, I get the confirmed trident setup, hits the 50%. This is a doji candle. I set you could even enter here. There's no need to set a limit because it closed inside the range.
Yeah.
Stop loss here. Like I told you guys, here was a 9 pip stop. I mean, that's really small. And this thing ran. You could, after this break.
It's crazy as well. Is that it's USD JPY, so it's not even anything to do with pound or euro, for example.
USD JPY is one of my favorite pairs to trade.
It's incredible, yeah.
Yeah.
And so what's also interesting as well is that a lot of people's strategies would be like to take Asia high and then target Asia low, right? But in this case, we've taken Asia high. That's where the entry pretty much comes in. But then it's worked out incredible.
Yeah, and then this RR was, let's see, and we'll just go off the 30-minute. Like even if you set stops the BE here, right? And you say you wanted to take partials. This ran for
Because that was the thing, like
1 to 28.
exactly, yeah. But
That's
to
what-
your point, as you said earlier, regardless, like the entry model for it to be as successful, they would probably need, people would have to replicate, to a T for sure. But in terms of the management side, that's where it's down to the individual, and that is really any strategy wise. That's really the bit that will make it profitable, not for the individual. Does that make sense? So like someone might not be able to handle 1 to 20. Right.
But that's what I'm saying is that I have the psychology to sit on my hands and know that a lot of people don't have that. They're like, when I had my Think Capital path, they're like, how did you sit through it that long? I go, I just trusted my model. And it's not for everyone. Like I said, it may not be. You may only take like a 1 to 5. That's cool. And you could put on a little bit more risk. I just prefer to just sit on the trade and let it run. But like I said, I'm telling you right now, if you're patient enough and you can nail this strategy down, it'll set you financially free. 100%.
Yeah.
Guaranteed. I'm telling you, you just got to be patient.
Incredible, yeah. That patience is big, though.
Yeah.
Right? That patience is big.
And definitely utilize the indicator that I showed you guys is the one with, see, if these candles were, like, I want to stress this, if these candles weren't green like this and they were red and blue, it would be an invalidated setup. You don't take it because it's not, the market conditions aren't there.
It's not showing the momentum, right?
Exactly. So these candles are closing green and black, which shows highly probable conditions for the trade to go in your favor. And then if you look up
Was it this trade here?
No, it'll be the one. Go. Let's see where we are. No, we're in 2023. Go this way.
This way.
Yeah. It was. I think it was here where I wrote A+ setup. It's over here. It's right here, I think.
Yeah.
Yeah. Zoom in.
Or this one.
Yeah, that one. See, this one was below the 200 EMA. But notice, like I showed you guys on the whiteboard, all of the EMAs are stacking.
Yeah.
You see, you're just riding. This is like a trend wave, I call it. And so I know it may be a lot for you guys to digest, but I utilize ICT concepts, kill zones, and then momentum. That if I were to put it in a simplistic way, that's what I do. Just ride the trend and then wait for an entry criteria that's showing you what's going on inside of this candle.
Yeah.
So you want to know what's the narrative of this candle. Now you get the confirmed setup that this candle wants to go higher, and that's it.
I love it.
Yeah. So I listen. I think it's an amazing model. It's literally one of one. I haven't seen anybody else trade anything like this in the space.
No, definitely. Neither have I.
Yeah.
Neither have I. I think high risk to reward, it requires, as you said, a lot of patience, and most people probably will struggle with that. Especially not only the patience size, because a lot of people a few years ago when they were trying to do high risk to reward, it was high risk to reward, but frequency was quite high still. Like they're basically just 1 minute time frame.
You can't.
And trying to like basically handle getting stopped, and then try and get a move.
Yeah.
But I think psychologically that's so difficult, to be able to accept losses or break evens over and over and over and over.
Yeah, like if you have a 30% win rate, but your RR is high, it's going to crush your psychology. Really, like you are not going to be able to handle that, losing 70% of your trades. There's no way.
Definitely. Well, Tyler, it's been an absolute pleasure. I appreciate you breaking this down for us and really giving us this insight into your trades. Like I said, a phenomenal, unique system, and more success to you as well. Continued success. You're absolutely crushing it. Everyone at home, drop a comment with your biggest takeaway from this episode. I know it's a very unique strategy. Any questions, throw them in the chat. Tyler will be there. I'll be there. Links for Tyler will be in the description below as well. Hit subscribe, hit like. Other episodes are on screen. And this has been Chart Fanatics. Take care.